Good afternoon or morning, depending on where you're from. Everyone, this is Rob. Hope you're having a great day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in the questions box so I know that you can. I would greatly appreciate it. I haven't had to use Zoom in a while. I forgot how big everything shows up in their chat box. All right. Still got people pouring in right now. Let's see. I think I got to share it. There we go. Beautiful. Fantastic. Thank you, Robert. I appreciate that. Brenda, Happy New Year to you as well. Afternoon, Kevin. Yeah, it's good year so far, right? We're that much closer to getting this COVID stuff behind us, hopefully. Although I don't know if you guys saw the market reactions today was not good. For those of you that have seen some of the things out there, exactly, Robert. It is just that too fake. Wonderful. So how's trading going for everybody? Give me some details in the chat box. Don't care if it's funded or non-funded. I'm just going to call it all non-funded. This is not about trying to get you the best candidates or the best person that's making money out there right now. This is all about making sure that you have an understanding of what's required to be a successful trader, right? What's required to increase your skill set in trading, right? Doesn't matter if you're doing it with non-funded money right now. The key is to learn how, and that's the best way to start. Actually, the biggest advantage in our business is it's the only place in the world that you can go ahead and learn this without putting real money into starting your business. It's non-funded trades. Yeah. Got burned on Googling that gas this morning. There you go, Brendan said 6. Brendan, how many contracts are you trading? Are you trading like 100,000 contracts? What are you doing? I mean, I want your trading account. So, Brenda, you took $3,000 today and made $646,000 on it today? Or is that your overall practice account? I shouldn't have said it. No one wants to type in their results now. Like, oh, I ain't going to say nothing. Oh, goodness gracious. Hey, Gillies, how you doing? Several trades today. Okay. Wow. That's awesome, Brenda. Good for you. All right, very cool. Keep in mind that everything we're going to discuss here is for educational purposes only. All of the trades that we look at are for example purposes only. We will not discuss your funded open trades. We cannot legally do that. This is all about hypothetical analysis on a position and or a stock. Erica said purchase shares of NEO and it's doing great. Excellent. Okay, good. And again, everything that someone throws out in the text chat, it's all considered non-funded. Whether it is or isn't, we don't care. Right, so Patterns in a Flash coming up on the 6th, which is 8 p.m. That is a bonus with Tony if you're in his Patterns in a Flash training. He does one class a month for that. Trading You coming up on the 7th. That's 8. It's actually 8 to 9. Mastering the Trade on January 8th. Yes, Friday. I said this last week. Friday, January the 8th, 8 p.m. We're doing a bonus class, which we do every 4 to 6 weeks. This one took a little bit longer to get on the books because of the holidays. Brandon has 2 bonus trainings going on. The first one is, well, they're both on January 8th, 9 a.m. is the E-mini Think Tank, which is E-mini scalping. I'm a huge fan of scalping on E-mini, so I love to see he's doing that. And then at noon, he's doing one which is more of a Q&A on wealth with spreads. It's kind of his first introduction to give all of you that were in his training an opportunity to step in and see exactly what it is that he's doing and be able to ask those questions. Right? So make sure that you are there. Guys, if you haven't, here would be my suggestion. If you haven't checked out what Brandon's doing in his Wealth with Spreads, go check it out because you get this bonus session included with it. Take the quarterly subscription, costs you nothing up front, There's a 2-week trial. Just send us an email that says, I'm not interested, cancel my subscription, and we do, right? We don't play games here, folks. Not what this is all about. Monster Market Movers coming up on the 14th and Inner Circle on the 21st. And then Mastermind Group picks up again this Tuesday. We never skipped a beat on it. Power Hour, Mondays, 12 to noon. Key to Be Free, the next one is January 24th. It's a Sunday at 1 p.m. We're building the pages out for today, so you'll be able to register. And POP, which is Power Option Plays, Covered Call Explorer, and E-mini Think Tank are all on their regularly scheduled program for this week. Here's our follow us page. I just got done with a meeting with my team. We are ready to roll out shortly our podcast, which is going to be some snippets on what's going on in the market, more the educational side of the market itself. So keep a lookout for that. All right. So Erica said, will you ever have a trading lab Monday through Friday trading options? Not sure, Erica. We've got a couple of, we've got 2 new things on the docket right now for live training that's going to be going on during market hours. Neither one of them are, well, I shouldn't say that. Neither one of them fit your criteria. One of them would be an everyday, but it might be a little different than you're thinking. And another one would be just 1 day a week, but that's really setting the trades up and kind of walking away and let them do their thing. And it is an option strategy on trading. So we are working on, so Brenda, Erica, we do have 2 new things scheduled for this year, right? Probably not before, one of them we may see happen in February. The other one is probably not until the second quarter to take place. The Friday ones, the 1 day a week would be probably in February is when we want to see that one in setting up there. All right. So let me go over to TradeNav. Let's go ahead and get all symbols. Let's go and turn on the streaming for it. Genesis is working on switching data providers right now. They've got a new provider they're bringing in for their stock data, which will also give them back the options data. So I'm really excited to see that come into play, right? So if we look at the S&P 500 so far, you can see what a great start today. It gapped up to an all-time high, right? Gapped and ran to an all-time high, but the opening was an all-time high and has completely fell apart, right? And lots of concerns out there, numerous things. One of the things they're talking about on CNBC is if the Democrats take Georgia and Senate and turns into a full Democrat control. They said the expectation right now is we'll see a 10% drop just by that win. We'll see the market go 10% down. So that's why the market ran, because it was belief that Georgia would stay Republican. But if the Dems win, it's an FYI to start looking at your positions. And I'll say it this way. Those that are in Inner Circle, those that are in the Mastermind Group, you have learned strategies to protect your assets. I taught you those strategies. And if you're saying, wait, Rob, I'm new to Mastermind Group, what are you talking about? Go back into the beginner trainings, the most earliest trainings on that page, in your members area, and go through those documents and those trainings and learn how to start protecting your portfolio. You've had all of these gains. Let's start protecting those gains now at this point. Steve said, unhappy that New Year's is occurring. The market's tanking right now. This is a prediction that the Dems will win in Georgia. How to play this opinion. It's rough, Steve, because it's all conjecture right now. We don't have a clear path. I mean, right now, if I'm doing anything, I'm jumping on the bandwagon to the downside, but I'm doing it for today because you just don't know what tomorrow brings. Okay, Brenda, good. I appreciate you sending that. Thank you. Right? I mean, if you look where we are now, if we closed where we are now, we went from a bullish bias to a neutral bias, right? That's scary since we ain't been at neutral since the closest to it is November 3rd. We've not had a neutral bias anywhere in here. It has been pure bull run straight to the upside. So overall, the markets have moved extremely well. Today's drop of 70 points in the S&P, right? That's the entire move high to low, 71. No, actually 71 is the Fibot. So the entire move high to low is about 35, 36 points a day, and we've already dropped 71. So tremendous move. Good. So Steve said sold off some of his positions on Friday, which he's writing covered calls on and holding now in the IRA. All right. Well, no, that's all good. Right. That's all good. I mean, listen, I still have positions. I haven't sold out my account on this. I actually did wind down on a couple of my positions last week that I got out of. I've, eliminated some of, and again, these are all paper trades, right? I've eliminated some of the things like the airline stocks from my portfolio, right? You look at Delta Airlines. All right. I mean, forget today, they had a big drop. You look at American Airlines, right? I talked about these as COVID recovery stocks, and they are, but there's other things happening right now. There are things such as we got all this vaccine out there and the states can't seem to get the darn stuff distributed, which is the stupidest thing I've ever heard of. Is we've got it, but we can't get it to you. Right? I mean, come on now. It sounds like we're still playing political games here. Let's wait, because Biden even went as far as saying, well, Trump said that he was going to have 1 million doses done, distributed by the 31st of the year, and he failed at that. He didn't fail at it. They were sent out. The states have not gotten them to the patients, period. It's just asinine what we're going through with this. It's almost like there are people out there that are saying, yes, we're going to screw with you every step of the way on this and hurt you for a political gain. Every bit of it. What is this that just popped up on my screen here? Okay, let's get rid of that. Yeah. Yeah, so Steve said, waiting for the results of the fake Georgia election tomorrow, playing UVXY on the downside and TQQQ for the upside, leaning towards a downside result. Yeah, I mean, I'm with you. You don't know. And even the numbers that come out tomorrow, they're not going to be real. They're going to be counting and recounting for a week. Right? And then whatever Trump's got planned for the 6th, right? Of all this crazy stuff that's going to happen in Washington, and they're going to disqualify the election and overthrow the results, and right or wrong, good or bad, you like it or not, folks. If you're trading, this affects you. You may be ticked off at what people are doing, but very clearly you need to understand this. That needs to go away now. You can be bothered by what they're doing, but you cannot bring that into your trading. That emotion will crush you as a trader. You will do the stupidest things. Trust me, been there, done that, got the t-shirt. You will do the stupidest things in the market if you get that emotional funk, F-U-N-K, funk in your head of allowing the political noise to mess with you in your trading. So be very, very, very careful on that component of it, right? It really is a scary deal. When we look at the VIX right now, let's get it to register. Oh, it is. Okay, there we go. All right. So we look at the VIX. I'm like, nope, that wasn't the candle. I know it wasn't. We look at the VIX, shot up astronomically. I talked about this in power option plays over the weekend, sitting at around that, it hit that 21 and a half level. Life is good, man. I love it at that level. Wonderful. And here we are back again at almost 28 with another upside target of around 31 in there. And we've been there many times at that 31-ish level. So fear is definitely present. There's no question. Fear is present. Don't look at the MI plus because we don't use this to trade the VIX, all right? But overall, go back here. Here's S&P 500. You can see the gap up this morning on a 5-minute candle. It gapped and ran to the all-time high and then clunk, 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 closed below, retested the 21. It failed as the 8 crossed. You got a signal to enter, and you've stayed below the moving averages ever since. What's that, Amos? I don't know what I said that was interesting. Sorry. I'm not sure when you typed it in. It doesn't really timestamp anything for me. Excuse me. All right. So overall moves, horrible, right? If we look at QQQ, did the exact same thing. Gap, fail, except this one kind of hung. And you could see we were just pinned between those moving averages. We just stuck right at those levels. And then a big pressing candle as a break to the downside. Oh, okay. The VIX. Yeah, that was big move. Exactly. Really big move. Amos. Yep. Really big move on the market, on the VIX from that. Fear is out there and the uncertainty. And realistically, folks, we're not in a place that we should be, in my opinion. We should not be at the levels we're at today. From an economic standpoint, there are still tons of people on unemployment. The fear that we were going to see the unemployment benefits disappear come the end of the year, right? Because the new stimulus hadn't been signed, right? That may sound great and fine and go, well, I'm not on unemployment. Neither are most of the people that are trading the markets, you may say. But there are plenty of people out there that are on unemployment. And I don't know about you guys, but I have tenants personally that have told us thank God for Governor Cuomo, who said, and I quote, I ain't got to pay you rent right now. But the bank still wants their mortgage money every month, right? So how many other people, if they're in a lower income, lose that unemployment and cannot not even pay their rent any longer? And now it becomes a waterfall effect, right? It just runs downhill, right? The water's just running downhill. And that's kind of where we are right now. So economically, where we are in the market, where COVID is, yeah, I don't see it belonging there at all. The market should not have had the run that it did, right? It ran on the Dems not winning Georgia and not controlling Senate, and that's great, but there is so much hype built in the market. The problem is this run that we've seen in market, you could see, if you look back at this sideways move in here, I could see all of this, every bit of this being given back. We're talking about, let's say 3,200 up to 3,700. So 500 points. I could see every bit of 500 points being given back. What's 500 of 3,700? What percentage is that? Can someone do the math for me? 500 of 3,700? It's 1/7. Right? Is that right? It's 1/7. I'm sure someone's got a calculator on that phone somewhere. 13.5%. Thank you, Trip. I mean, you're talking about potentially a 13% drop, 13.5% drop just to get back to where we ran from. And you can see we've been in that range before. We were there. Lower tops, we had a little bit of a wedging pattern, slightly lower bottoms. We had a little wedging pattern on that breakout, but I can see all of it being taken back away again. And how many people have bought in here their stocks? You look at the Apples of the world, right? Apple's had a great run, right? How many people bought it at 113, 115, 120, 132 last week, and are now seeing it down at 128.5? And that's one, right? Here's Amazon. Almost 90-point drop today. We're now under all the moving averages. We went from bullish to bearish intraday candle. We went from bullish to bearish on the market. Yeah, kerplunk, exactly. Kerplunk. Google. Just waiting for that candle to pop. Oh, there it is. 40 points to the downside. We went from a bullish bias down to a neutral bias right now. We break that 1,700. There ain't nothing stopping us. That 1,626 might be some hesitation, but I see us probably getting more down into this 1,575 level, 1,580 where this fib line is. And again, we could see all of this go back right, to where we started the run, which takes us back to 1,548. So the risk is out there and traders are not treating it with such, which is why for me, I've been talking about shortening up your time periods of being in that trade, which is why in power option plays, we have done on all of those non-funded trades that we do. We've done so many day trades because when we are in that, when we're in the market and we're holding overnight and we get a gap up this morning and we're going long, and then 3 minutes later we're getting crushed as the market flips over, right? And we went long yesterday or the day before. You know, here, at least in the day trade, we've got the opportunity to minimize our risk in that trade, right? So, and again, these are, let's see what that opens up. Okay, so Amos said, and even with the market being bullish, the trades were called aggressive. Yes, we still called it aggressive. The only thing we didn't call aggressive was the belowish. Okay, you spelled that one right. Bullyoish. That's a new, it's kind of a mix of Brooklynese and Long Islandese. It's bullyish, right? Above that 133.5, right? That one we did full 10 contracts, but it's $130 stock. You know, we did aggressive on Amazon. We did aggressive on PANW, right? But when you look at numbers, right, there's our total for the year, $1,635,000, $1,635,321. That was our total. The only open position we have right now is Adobe. That's the only one that's open, which will probably got smacked on today. All right. So overall, not a bad year for us. And when you look, very many of our trades were day trades. Right? Why? Because that's what the market gave us. Is that what I want? Heck no. You go back to the beginning of the year, you had all these swing trades. Life was awesome. Right? These are all swing trades. Right? These swing trades. Right? And we get into April. A couple of swing trades, a couple of great bearish trades in there. Right? Still some bullish ones. All right. So Oscar said, just learning the patterns. Do you consider that a head and shoulders pattern on Google? So, you know, it kind of is, but I really, for me, you know, and the way that I look at it is this, Oscar, let me get drawing tools. I need to move around to get them. A head and shoulders pattern works best for me more like this. Here's the shoulder, here's the head, here's the shoulder. Right? I like a little bit more height between my head and my shoulders. This right here, I feel like was, you know, the Indians shrunk the guy's head or something, and the head's pressed down into his chest cavity, right? Because here's your shoulder, and here's your head, and here's another shoulder. So yes, theoretically, it is that pattern. It is that pattern, but it's not a very good one for me. I prefer a little bit more depth to it. And then you said on SPY. Not really on SPY, no. Nothing really there on SPY. That wick stretching up, if you're trying to call that a shoulder, the answer is no, I wouldn't look at that at all. Right? So I prefer a little bit more build to the center, to the head that way. And my overall preference, so let me give you here. Let me do it this way. Let me get rid of this. Let me grab just a white background. Just grab Notepad. All right, where did it open? Oh, there it is. Different screen. So if I look at this, here is a head and shoulders pattern. We'll call this 1. Let's see. We'll call this 2. And we'll call this 3. Which one would you say you like the best? And I'm going to ask you why. So be prepared to give me a why. All right, Trip. So you were the first one in. Give me a Y. I know that'll take a couple seconds longer for you to type it in. You can type your number and then your answer Y. You can abbreviate the answer. You want to put it in with it. But Y. And I'm not telling you my answer yet. Put your answers in, folks. Don't wait. Put your answer. Do not avoid these questions. I will throw you out. No, I'm kidding. This is for you guys. I know the answer. All right, you're right. Right on track, Trip. You're 100% on track. Not necessarily, Erica. No. Assume that to be the same on all of them. Yes, Trip, you got it. Good, Amos. Good, Wendy. All right, so a lot of answers, and I'm sure others put it in. I just can't see it. It just moves too fast for me. Gerald was the last one I seen here right now, and Gerald typed in lower right shoulder, and that's exactly the answer. That's exactly the answer. Let's see how this little lilac thingy works. How this color. So here's my shoulder. Here's a higher shoulder. Here's my shoulder. This one's about the same height. Right? Here's my shoulder. Here's a lower right shoulder. So you need to look at this from the standpoint of what just happened. What transpired here? We made this move up and we failed. We pushed up to the head and we failed. We made a higher shoulder and failed, but we made that higher attempt. And remember, the break of the neckline right here is where the head and shoulders really works, right? Well, I like, to me, that looked bullish on this second shoulder. Here on number 2, we were about the same on both. And someone had typed in, and I don't remember who, I apologize that I don't remember and can't see it any longer because it's 5 pages back on the comments, that they were equal, right? And they are. Number 3, Trip was the first one to type it in. We had a shoulder, our head, and a lower shoulder. So not only could we not make a higher high, which is really what this is about, right? You had, let's get a color you could see because I can't see that. You had, that would be your shoulder. That would be your head, right? And now if we made another move up, we had a new high there. Now we're in a trend. I mean, look at what just happened there. Unlike me just eliminating, where'd my mouse go? Unlike me just eliminating all of this and saying, there's the next shoulder, right? 2 patterns that before that last 2 legs, right? These last 2 legs here, before those were the same exact setup before that. Having that lower right shoulder, stand in front of a mirror and look at yourself with your shoulders square and then tilt to the right, right? You couldn't make it as high, right? On the push up, and the potential of the break is stronger. We also have a different angle here for the neckline, right? But the concept is, I personally, number 3 to me, ding, 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 that's my winner, right? I prefer that shoulder. But notice on all of them, you've got a higher head in there. If I had this, yes, I've got the lower right shoulder, but I am not a fan of that head to shoulder ratio. It should have some distance to it. I don't have a dimension. It just needs to look right, and it doesn't look right at all. All right, so let me go ahead and clear this off so we go back to a chart. Oscar said, thank you for the lesson on head and shoulders. Great help in understanding this pattern. Excellent. Yeah, and Tony is probably the best of anybody of explaining this type of stuff. He does a great job in his patterns in a flash, but I'm glad it helped, Oscar. You're quite welcome. So with that, let's, so the lower right shoulder, Brenda, indicates, here, I'll grab a pen again. Oh, where is it? Right here. Lower right shoulder. So here we had the left, the head, and trust me, it is lower. It's just very thick marker and not a lot of white space for me to draw on. So we made this high, we made this high. That was first and second high. Not only did we not make a new high, we couldn't even break the previous high. So the expectation is a stronger potential of breaking that neckline and having failure, Brenda. Does that make sense? Yes? Okay, good. Very good. Yeah, so he said, someone had said the lower right, but don't remember an explanation. That this is the why, PK. This is the exact why. I've never heard her say it. It's what I've been taught since 1997 when I started in the market. Right? You're welcome. You're welcome. All right, so I'll clear this off again. Let's go back to the mouse. And we're off. What symbols do you want me to look at? Keep in mind, I am not here to analyze your funded positions. I cannot legally tell you what you should or should not trade. So with that being said, everything is non-funded. So Dismal is the first one that Amos put in. Disney, actually. They're not really dismal any longer. They are absolutely phenomenal, actually. But sorry I didn't invest in this company much earlier on than now with the run they had. I saw the numbers. They're talking about 384 million people will be subscribed to Disney Plus at $10 a month come 2024. I mean, add the zeros to that, folks. I mean, 384 million. What's that? 3.84 billion a month in sales of Disney Plus alone. Hell, shut the amusement parks down. You don't need them anymore. It's too much risk. You can do it on that. So we're sitting right at the moving average. I don't really have a good pullback for a new fib. I can't use today. It's an open candle, so we can't draw off of that one, Amos. But if we resolve where we are right now, Amos, that's what I would be looking for. And I would probably draw from this. Actually, I wouldn't draw from here. I'd probably come down to this low right here, Amos. So if I back this one up, in other words, I'm not getting rid of it. I'll keep it there. You know, we got the move down to the 236. Yeah, I'm going to say we'll leave it there, Amos. So 171.62. So that's our next downside target. I would be hard pressed unless it was a day trade to take. I wouldn't be doing it today. That 8 moving average is in our way. But if we can break there, that 175, and you got to move down to 172, there's a short-term day trade has some potential there. If it does turn around and Georgia doesn't win, or we finally use up all the COVID vaccines that we're supposed to, and we stop lying to the American public about it, and blaming other people that they shouldn't be blamed for it, 180, get above the 179.5 level, Amos, and you're looking at 188.5 is our upside target. Do you need a fib in there? No, we don't need a fib, so we're good. Right? So I hope that one helped. And then target, TGT, Target. Let's look at Target. So Target's held up okay. You know, today they're down 2.25, $175 stock, no biggie. It's sitting at that 174 level. You know, if we can get the bounce off the 174, Amos, close the market, bullish market tomorrow, get the bounce off that 174. The 81 is 7. We got 6. We need a fib in there. I wish we didn't, but we do. So let's edit this. Let's add the, if I need the fib here, I need the negative 136 also. All right. So it kind of cuts our profit potential down. And well, actually, look, Amos, you can easily get that move in a day. Easy. I mean, it happens regularly. That amount we could see 74 to 77.5, $3.50. But if we can close where we are and get a small bounce tomorrow, I would be scaling out of half the trade at 77.5, the other half at 81 in your non-funded trades. All right, let me just pull that out a little bit. I like it. All right, so I hope it helped, Amos. Tripp's asking for Baidu. Baidu is in a rock and roll phase. right? What a great move. So today, could today have been, well, let me ask this. Oh God, let me do this first. Because I'm going to ask the question, I'm going to mess everything up. We already did Baidu. We've got Qs, GDX, NVIDIA. All right, I think that's good enough. So would you want me to go ahead and analyze this position the way that I do in power option plays to say, what would I have done today as a potential day trade? If you want me to go through the analysis, give me a 1 for yes, a 2 for no. If you don't want me to do it, it's okay. Just tell me no. So out of hundreds of you, there's like 20 that said yes. Exciting. It's exciting. Sorry, the water went down the wrong pipe. All right, so let's go do this. All right, let me just lock those numbers off. So we're looking at that 219.84. So right now I'm writing down 219.84. I'm writing down 210.47, and I'm writing down 227.41. Right? Those are the only real numbers that I am concerned with whatsoever. Where we are now, where's the nearest support? What's my resistance? What's my new support level? All right, so let's go ahead over to, let me fix this. Let's go over to TradeStation. And this was Baidu. Okay, that was on target. Baidu. Okay. Oh, there's no S. Goodness gracious. It's Trade Navigator needs the S. All right. So what would you have done on the trade? Well, first thing is we got to snap in these lines. I got 3 lines. We're going to snap in 3 lines. All right. I'll take 224. Okay. I'll take my top line and double click on it. I'm going to change the price. 227.41. We're probably not seeing this line. It's probably jumping off the screen. Oh, barely, but it's there. I'll take my lower line, which is 210.47. Right, that one's gone. We'll bring them back in a minute. And then my center line is going to be 219.84. Okay. So the way that I look for a trade is, did we get a close near the key level, which for us is 219.84. Our key level is right here, this line at this point. Did we get a close near there? That is my ideal setup, is if we got a close, right? We didn't get a close. We closed up above, right? And then what happened? We opened slightly down. We ran down and we bounced. Now you could step down to the 1 minute here, or 2 minute if that's what you use, but if that's what you used, right? So we see the stock stretch down and it taps that 119, that 219.84. Is it an ideal setup? No. A better setup was a bearish setup, and we broke support here, came back, retested it, and failed because we were right there. Here we were all the way up here on our close, and now we get this stretch down. It could have been nothing more than a head fake, which obviously happened today. But I want you to take note, and I want you to look really, really, really hard. I probably should get something other than black. I want you to take notice of this line and of this line. We retested this line right here and bounced. Did we have a clear and concise entry? Concise said, did we get a setup that was the right setup? Was it perfect? No. Was it a good setup? Absolutely. But it's not a perfect setup. Even this one was not perfect, right? But so did we have the setup? Yes. So we had a concise setup. Do we have a clear path to our resistance? Up to here. Now we drew the lines. This was the first line we had drawn. This is the second line. And then there's another one down here somewhere that you're not seeing, right? There were no other lines in between here. So we had a clear path to our target. So yes, Yes. And look what happened. We ran right to it and failed. Yeah, but Rob, it doesn't. Did it happen just because you drew the lines in there, Rob? Because you're the one that did it? Yes. No, of course not. It's not because I drew the lines there. It's because every one of you drew the lines there. No, Rob, I don't use Fibonacci's. You don't, but you do. Your emotional context of the movement of that position has everything to do with what your inner mind, your brain sees that you don't realize it's seeing. That 227.41 level, your brain sees it. You just don't know it. You just don't know it. I want you to think of a table. I want you to go buy a brand new table for in your house, right? Hypothetical, of course. I want you to buy a brand new table. You have a choice. You have a table that stands about waist height in your house, and it's about 3 foot long and maybe a foot deep, right? 16, 18 inches maybe deep, right? Or you have another table that's 4 inches tall and 7 feet long and is only 3 inches deep. So if your ground, where's my pen? So if this one line is your ground, right? The first table I talked about is up here, right? And it is a very pleasing size table. Okay? Very pleasing size table. This is the ground. The second table is that long and is only 4 inches off of the ground, right? You look at that and go, my goodness, who would put that in their house, right? It's a tripping hazard. Exactly. It is not pleasing to the eye. It's not. But what is pleasing to the eye, what you don't even realize is this 227.41 is extremely pleasing to the eye. You just didn't know it existed until you saw it drawn on my charts today. And when I say you didn't know it, in your brain, you weren't thinking of it externally, meaning, oh, I see. Oh, yeah, I think it's going to run up to there. It's never been there before. How does it go? Almost to the penny. If we look, what is our high of the day today? The highest high we ran. The high here was 227.58, and we're talking 227, what was it, 41? Oh, I got it written down. 41. 41 to 58. We're talking about 41, 19 cents. 19, 41, 51, 17 cents. 17 cents above that line is where it went. How can it be that accurate with all-time highs in play? How? Oh, Rob, you draw enough lines, it's going to hit a line. Not like that, it's not. Now, you can't look at this and say there's enough lines drawn in there. We're talking about a difference of 220 to 227. How is it possible? You already saw it. It was there. So sorry for the distraction on that one, but you need to understand that the opportunity was there. Now, we're out of the trade. We're done. Would I have taken a bearish trade off of there? Why would I? I've got a bullish move going on. What would make me say take bearish? Nothing would make me say take bearish. Right? So now what? I watch it down. I watch it drop. I watch it drop. I watch it drop. We get a moving average cross right as we broke on this candle, closed slightly below. I much would have preferred a close down here and then a gap up on this candle and open near that line and fail. And I would be all over that red candle right there as the entry to the downside. Right there. Oh, Rob, it hasn't hit target yet. Okay, I didn't say it was going to get all the way to the next level. But that level is in place. I know what it is. I see it. I know the level. You know, on this chart, it's hidden. Right, 210.47, it's all the way down here. 210, 29. Oh, wait a second. Is that the level? Let's see. 210, 219. Oh, yeah, it is. We don't need a fib in there. We've already got one drawn. Right? Does it have the potential to move there? Sure it does. $9 a day. We move 19 as a fibit. So that's 2-day movement. So yes, we've got the opportunity. All right. But are you okay if you took a bearish trade and you're not out yet? You took a bearish trade when it broke 220 and right now it's sitting at 216. Are you really that upset if it doesn't make it down to 210? If at the end of the day, you're able to get out when the stock is at 216 and you had a $4-ish move on the stock price, which would give you almost $3 move on the options price, how bothered are you by that? I can't believe I wasted my time all freaking day in this trade and it only moved $3. Yeah, so PK said, what about taking half off in the mid? You could, PK. We've already got a Fibon in here. So I get a little bit iffy on that. But that's why I went and checked, PK, because I looked at this and went, oh, wait a second. When I was on TradeStation, I'm like, okay, watch. What happens if we put, I don't have it in here. Oh, no, because I've got a 136 in there. Okay, let's just do it this way. Not right here. Let's do it this way. I'm going to duplicate that midpoint there, PK, the Fibon. I may be off by a little bit, but I'll be pretty close. Oh, darn. Okay. Let's do this. I can't grab the line anymore now. So let me do this. Let's edit that and watch. Like magic. That's the midpoint, PK, that you would have scaled out of half of the trade. Gives us about $4.50 move, which you might have picked up $2 or $3 of that 4.5, maybe, right, at best. But you're out of half the trade now, PK. And it's a standard fib that takes us out. So go back to this page real quick, right? When we did the analysis, well, let me ask you, was this worth me spending the time to go through it? Because I could tell you, well, I won't say a word. Was it worth it? Rick, thank you for that sheet. I appreciate it. Because I can tell you right now, half of the answers coming up in my chat are my inner circle students and or my mastermind students in here answering these, saying, you know, how powerful it is, right? Yes, can we do another, please? Which one, Amos? What do you want to do? And I got to go through and get to the other candidates. Qs, you know, I traded them for so long. It's almost like I have an affliction to it that I don't even want to. All right, so first I need to just confirm the fibs. That was a good move in there. We definitely need a new fib. So let's snap a new fib here. So Brendan, I'm going to do two things. I'm going to do this the way Amos asked me, and you asked this, I believe, as to look at it as a candidate. And the reason I'm saying Brenda is because Brenda's always looking at the Qs. And I wrote it on the list. I just didn't write down who asked it as I was trying to jot these down. Okay. So good fib move, nice strong V bottom, good strong V top, pull back to the 236. Life is good. We are now in a neutral bias. Do I have a clear and concise entry down to my 302? We're going to assume the market is, well, if the market was open, let me rephrase that. The market had not opened yet, meaning we didn't see today as a day, right? Did I have a concise entry? And the answer is no. My moving average is way too far away from my fib line. So I'm going to wait, right, to take this trade. We gapped up and we gapped up here on the open, all-time highs, right, on the run up. And then we fail. Was there a clear and concise entry there? Well, the first thing is that I have a clear path to support, and I've got a resistance, not a resistance. I have a line in here where the moving average was yesterday, which is that 311, right? So I did not have a clear path to my 308 target. That moving average was kind of in my way, right? So it didn't really fit the criteria there, Amos, of was there a trade setup for me to take today? The answer is no, right? The clear path wasn't there, nor was a concise entry. Yeah. So yeah, I didn't see you write that, Rick, about Q's needing a new path, right? And the poppers, exactly, PK. Yep, exactly. Right. So I hope that was helpful there, Amos. Brenda, we're down here in neutral bias. If we close here, no bullish trades until you close above the 8, right? Now, do I have enough room in here? 308 to 302. So I got about $6.50. You know, that overall move is okay. The 21, I'd be okay with the 21 where it is and still taking the trade, because here's the magic answer is right here. Nope, wrong one. Wrong one. One day I'll get them to put one in just for me. Now, what am I doing here? All right, 1, 2, 3, 4. Right? Is that the wrong one? That's the wrong one. Here we go. Okay. So the magic number is that 25%. The distance of these two lines is my moving average lower than that. If it is, then I'm not taking a directional, a day trade on it, right? I don't want to take any trade on it if it's lower than that 25%. It's not. So the trade is a viable potential, assuming we closed right there. What I really love to see, though, Brenda, is I'd love to see it stretch up a little bit first tomorrow, again, assuming we closed here, and then fail from there, break that green line, and that would be my trigger into the entry. Right. No, I get that, Rick. Brenda was asking for the commentary. We're good. Okay. So there's Q's, AMD, which I believe was Trip. Let's get a bigger picture there. You are welcome, Brenda. So we're in a neutral bias right now on AMD, Trip. I've got a clear path to the 87.29. I would be looking at these bottoms in here as my break point for taking the trade, somewhere in here below that 90-60-ish level, with 87 as our target. Yeah, we got a $2.50 move a day, so life is okay. If we're going to move up today, if we're going to move up and close back above the 92.05. We had a good move today. We would have had a nice bullish trade if that set up for an intraday setup as well, depending on how the setup looked. But yeah, so I'm good with that trip to the downside. You know, that moving average to moving average, look what we are. We're at a fib line. We're at a fib line. Life is good. GDX. Whew, yuck. Okay. Market vectors, gold miners. Got it. It's gold ETF. So I'm not a fan of the position and again, I don't remember who asked it, but when I look at it, it just hurts. It hurts my eyes. It hurts my head. It just hurts, period. So it gapped up to bullish because the market went down. It gaps up, right? It goes bullish, but I'd be looking, you know, we need the moving averages to flip around. I need the 8. 8's in a better position. So you could take a bullish trade, but I don't have anything here that says take a trade. There's too much. It's too erratic. It's too all over the place. I would not do any justice with trading GDX because it's got no consistency. If you go back, we had great consistency. Here, we move down to the moving average, fell a little bit, we pop above. We move down, pop above, we fell. Gap up, we fall down. That was decent right in there. And then here, we're just kind of all over the place again. So it's that uncertainty basically tells me to stay away. You got GLD. It's got the same type of pattern. So I'm just not comfortable with anything on that. NVIDIA. So sorry I couldn't give you more on GDX. Just wasn't, it's like NVIDIA. I mean, there's nothing there, right? It's yuck. The pattern, it wasn't erratic like the other one, but like GDX, but it's just, there's nothing here right now. It's died. It's gone to sideways land, which is right next door to stock land, right? There's nothing there. If you can get a day trade down to 510 would be my potential day trade. To trade the upside, you needed to get above the 529 on a close, and then you have a clear and concise entry to 552, if that's the case. SPY. Woo, baby. So again, life was good. Hit a great high today, and then that pullback. Right now, we're in a neutral bias. So what would my trade be? I'm okay because I don't count 55 as a consideration of a stopping point. I'm okay if it breaks that 364.38, which I'd love to see it do today. Break and close down here, maybe 361, 362. Come back up tomorrow, retest and fail. That 354.5 would be my target on that one, Erica. I mean, it all depends where it closes today. If it closes above the 364.38, then no paper trade for tomorrow, right? It's just not setting up properly. And going back to what PK talked about of, well, do I split, put a fib in there and get half of it and take half of it off? Look at where the horizontal part of my mouse is right now. It's right at where that 55 is. So what a great point to say, you know what? At 359, I'm going to go ahead and, that's a support. So somewhere above that, 350, 360 maybe, I'm going to go ahead and pull half of the trade off there. Right? Folks, there's a lot of benefits of coming back, and so many of you do week after week after week, and I know it's challenging to be able to do so for some because of life and all of that stuff. I will tell you that those of you that are in the inner circle, ultimately we'll work into the mastermind as well. This month, we have Ryan coming back into the inner circle again, Ryan Litchfield, for those of you that know him, the co-author of Candlestick Charting Made Easy with Gregory Morris. Candlestick Charting Explained, with Gregory Morris. He's coming back in this month. The following month, guys, there is an exercise I just revealed to my team, which if you'll follow the exercise, as much of the nail biting and pulling your hair out you're going to go through following this exercise, I would say, without using the word guarantee, but I would pretty much say that I could probably find you 5 or 6 hours a week that I'm going to free up of your time. And I've seen this in just a couple of days for myself of what I've been able to do. Some of you might know I have 1 or 2 things on my plate, right? And it was great having some free time over the last 2 weeks. We closed the office down here in New York. The holidays are here, more family time, but more time to just get away and get some, business running type things done. And this is one I've been working with or trying to figure out for a while. And I was duly impressed with what I came up with today for this, and shared it with the team earlier today. So we're going to share that with you guys in Inner Circle. And then, of course, we'll share it in Mastermind as well with that. And I'll get you back a couple hours a week. But by being here and focusing on things such as, how do we look at the intraday setups? Did we have a clear and concise entry? What do we do on a day like today? Why did we hit the levels we hit? Why did we move right up to 375.74 today? What did we get as an actual high? The high was 375.45. 30 cents on a $375 stock we missed resistance by. Why? Because it broke through it once before? Heck no, folks, it happened because that line is there, whether you see it or not. Meaning if it's not on your chart, it's still there. Traders are still focused on what happens with fibs, and even if they're not, they just don't know it. It's called a pain threshold, right? It's exactly what it is. It's exactly what it is, right? All right, there you have it. The first power hour of the new year in the books. Listen, stay focused on the quest to becoming a great trader. Keep crushing it. And I want you to remember, it's not a New Year's resolution, right? I want you to resolve today on the 4th, not the 1st, resolve today to do the things I tell you to move forward in trading. If you want to become a better trader, stop following you and start following someone that has a better understanding of the market. Let me teach you, walk you through, show you the steps that will make you a better trader. Am I guaranteeing you that you'll all profit from what I show you? Of course not. You're all not going to do exactly the things I teach you. You won't. And even if you did, there's no guarantees of anything in the market. The guarantee is if you do exactly what you've been doing, you'll get the same results you've received up to this point. If you truly believe that the market can work for you and that you truly are just one trade away, then stop following you and start following someone that has a better understanding of what the market does. With that, ladies and gentlemen, you have a great rest of your day. God bless, and I will see all of you at our next update. Take care, folks. We'll leave the room open a couple of minutes so you can grab the links that Amy dropped in there earlier on, and you have a great day. See y'all soon.